Good morning. This is Ken Long from Tortoise Capital Management on May 4th, 2012, and I want to go over a thought experiment in the Ready, Fire, Aim technique from yesterday, May 3rd, 2012, that incorporates the regression line crossover and our thought experiments with the volume-weighted average price, or the VWAP. Quick look at the chart. What we got is a 3-minute chart here. On the left is SPY, the market, and on the right is UVXY. That's the double inverse VIX. The double VIX. That's got about a 15% ATR percentage per day, so it's very volatile, and it's low cost and has a ton of volume. Great trading vehicle. Often inverse to what the market is doing. Quick look at the layout of the charts. We've got a 30-period Bollinger Band using plus or minus 1. Standard deviation is the boundaries, which we call the river. The Bollinger Band mean, or the BB mean, is the red line. That's the 30-period simple moving average. This purple line represents the volume-weighted average price of each 3-minute segment. The orange line is a 2-period exponential moving average of price. I'm using that as the proxy for price. I actually have a tiny little white line hidden behind. That's the actual price, unweighted. But I find that the smoothed price action of the EMA2 makes it easier to see signals, and I've shown the in UVXY over here what price looks like with the candles and what it looks like without the candles, and I'm almost finding the candles to be a bit cluttery. The blue line is a 10-period regression line, and you see it's a smoothed version of price, although it can overshoot for 2 or 3 candles, as you see here. And then the black line is a 30-period regression line, and that also can overshoot a little bit. So the slow regression and the fast regression. So we were getting in, this is in Central Time, so at about 2:30 in the afternoon, so there's another I'm sorry, that's Eastern Time. So this is about 1:30 Central. So there's about 90 minutes left in the session. And what we had today was the S&P, or we had yesterday, the S&P gap down, sold off sharply, and then found some support and was hovering right around this 139.20 for a long period of time. Bollinger Band had turned. There was a series of higher lows. And with 90 minutes left in the session, the hypothesis was, well, will the S&P and will UVXY, the VIX, return to their volume-weighted average price before the end of the day? What that means is in the S&P, it's a move from about 139.23 to about 139.28. So it's only like a 5 or 6 cent move. Now, UVXY is more volatile, and it often gets out in front of and makes more extreme moves than the market. And you can see that this picks up the afternoon. The afternoon move was not symmetrical to the market, but it had done a regression line crossover below the river, as we call it, and we had a successful trade from 1250 up here to about 13 when the regression line crossover occurred again. That's the exit. That's the window of opportunity, is when blue is above black. Re-entered when it came back, found support at the VWAP above the Bollinger Band mean, and then left the river again for a re-entry at 13 and a trade up to 13.64. So a 60-cent move, and with a stop just below the Bollinger Band mean, that's a pretty good trade. It's about a 2 or 3 hour move. Well, what we were looking at was failure to follow through any further. It had already made an extraordinary move from 12.50 to 13.60. That's actually not even extraordinary. It's only 7%. So it's half of an ATR percentage. That's why I like trading this thing. Price was crumbling, as you can see, or decaying, and so it's not making new highs. and has already had one sell-off back to the river, and then a bounce, and then a sell back to the river after the regression line crossover, and now you get a series of lower highs. And now the hypothesis was, with 90 minutes left in the session, are we going to get another big run up, or is it more likely to come back to the volume-weighted average price, given that the S&P was in a pretty tight range and had only a short move to go back to the VWAP. And when price goes back to the VWAP here on an increase, I would expect the hedgers to be getting out of their VIX, and so that sets up about, if we looking at an entry now somewhere around 1350-ish, or between 1350 1360 to go short, we've got a 50 or 60 cent move back to the VWAP, while the market has about a 6 cent move to get back to the VWAP. So that was the question. Will we go to the VWAP before the end of the day? My hypothesis is that if I treat this spike here as the high of the day at 1365, I've got about a 15 cent or 20 cent, maybe call it 30 cent move for an initial stop, and I can see 50 or 60 cents on the downside as a short target by getting to the far side of the river. That's a reversion to the main trade, reversion to the VWAP. That gives me a 2-to-1, so I can go ahead and take that. I can take that trade. Now, basically, what happened was what we've done is, I'll just read the chart, that we're using a ready, fire, aim technique. And we're going to identify 2-to-1 reward to risk opportunities that are manageable, frame the idea as a hypothesis, and trade them at manageable risk levels. And so in this case, it was to go short UVXY as if it were going to go retest the VWAP after it had just had an awesome move up to an extreme level that looked like it was failing. So we've had this really powerful move up here with a parabolic move up to the top, and then in the yellow zone here, price is crumbling and weakening, so it doesn't look like this parabolic move has any more legs, particularly after the second fail. It tested this top and then couldn't break through, and then starts selling off. In this candle, then, I'm going to go short. I got a good fill at 1358. I'm going to use a 30-cent initial stop. I'm going to target the VWAP down here as a potential target area. Rough calculation, that's about 50 or 60 cents. That gives me approximately 2-to-1. This is the area where we posted that last chart in the chat room, say that looks like an opportunity developing with an entry to go short here with a 30-cent stop. It'd be actually off the chart here a little bit, and with a target of getting back to the VWAP. That's the purple. And so we get this entry. It crumbles almost immediately. As soon as price breaks through the Bollinger Band mean, here the red line, that's a time to move at least to no lose and to cover the cost of the round trip. So within about 6 to 9 minutes, you have removed your personal risk from this, and now it's a question of how much does the market want to give you. It quickly collapses through the river, breaks out of the river, breaks down to the VWAP, penetrates all the way down to 1295, and then starts recovering, and then it starts chopping around. Pretty soon you can see the 10-period regression line starts changing and starts going up, and so I end up taking my exit in here at about 1305, and that gives us about a 1.8R move on a simple kind of a just regression line crossover signal, price breakdown, 2-to-1 profit target. It follows through and behaves the way it's supposed to. When it doesn't fail further, you've got to be out not later than price re-entering the river. And then you can see almost right after another regression line crossover, as we get closer to the end of the day. Now we only got about 20 minutes left in the day, and I don't want to carry this overnight. So by the time price and the 10 period get back into the river at this regression line crossover, somewhere in this region you have to be exiting in order to realize the gains that you made from your first hypothesis. Now, when we see regression line crossovers occur outside of the river, the initial target is we expect them at least to go back to the Bollinger Band mean, and that's what UVXY did to close right at 1333 after the right at the close. And so what I want you to see is just how quite often these moves are very symmetrical. You had a support level after a leg up. You had a support level around 1290. You had this green region move up here about a 60 cents hesitation zone, and about a 60-cent move back down to the VWAP. That's the targetable move. So if you can manage 20 to 30 cents of initial risk and get to no lose quickly, I consider that to be a low risk idea, even though the VWAP, the UVXY has a 15% ATR percentage and is not for the faint of heart. But again, intraday trading is no place for a nervous person, as our hockey friend Mickey Redmond would say. So that's Ken Long from Tortoise Capital. Good trading. Keep your risk measured and your powder dry.